Yeah, Tim Biggam back again on a Tuesday, and maybe borderline whether or not we have an update here. We're kind of chopping back and forth between unchanged on the Dow here, so whether or not it's 21 straight Tuesdays in a row up or not remains to be seen. But given the fact that not only is Tuesday having a little trouble, but the market's having a little trouble here, as I alluded to last week, we finally had a little bit of that correction that I've been looking for. Took a little bit of those long puts off the table, finally being rewarded for a somewhat bearish stance. And going forward here, selling some out of the money call spreads is kind of the play I'm looking at. Given the fact that the VIX is elevated here, we're back above 16. Option premiums are comparatively rich here, so the fact that the rally has stalled out and we kind of have some highs in place, positioning just above those highs with my short call strike price, then buying usually either 5 or 10 points further higher depending on the price of the underlying to protect that. So for example, on Google, looking at selling the July 920 calls, buying the 930s, receiving about 220 net premium there. Same thing on the overall market, looking at that 168 strike out on the SPY, buying the 170. Again, just looking for kind of a sideways to perhaps a little bit lower market over the next couple months, given the veracity of the rally and kind of the reaction that we saw in the market. I think it would be tough going for the market for the next couple months here. Certainly names like Tesla finally came in, some long put plays finally rewarded there. They had an article on Tesla, how much they'd have to sell if you project out to, 2020 to justify the valuations at this level. So the fact that a lot of these stocks, finally had their comeuppance, I think has given at least pause to this rally for the foreseeable future. And given the fact that the VIX is elevated and I had some puts on that I have, either hedged off or took some profits on, I prefer selling some out of the money call spreads here to position kind of for a sideways market, a do-nothing market over the next couple months. I just think the market may have to back and veil here until, the actual tapering comes into play here. I think the downside, may be somewhat muted here, certainly 3 to 5% pullback. You might have buyers step in there, somewhere around that 1580 level on the S&Ps. And to the upside, I think, the highs that we saw beginning of last week will probably hold. So I think kind of a big range, no change until further notice. So I prefer option selling to option buying here as far as trade structuring. And given the fact that I'm a little bit more bearish than bullish, I like selling out of the money call spreads. If we do have that pullback, we'll probably look to maybe hedge off some of those short call spreads with some short out of the money put spreads, using the same kind of philosophy there, looking at a stock like Google, maybe somewhere down around that 810 level to sell some out of the money puts by the 800s, position kind of with what's called a condor, where you're short a call spread out of the money and a put spread out of the money, hoping for really not big moves to happen over that time frame. So until next week, this is Tim Biggam. We'll see if this is 21 in a row or not. And certainly, being a blackjack player that I am, 21 may be the number where it stops here. But as always, keep your position sizes accordingly and keep your stops in place. Take care.